Hello everyone. We will start with our first lecture on certificate course in income tax. So myself, Dr. Supriya Yadav, I welcome you all for this course and for the first lectures. So let's begin with the Income Tax Act. Okay. First of all, what is tax? That we have to understand. Okay, that tax is a fee charged by the government on a product, income, or activity. That is the thing. So tax can be on income or on a product or on a activity also. That's why we have a income tax as well as a GST in India, goods and service tax, right? So there are two types of tax as we discussed just. That first one is the direct tax, second one is the indirect tax. Direct tax means the income tax and indirect tax means the GST in nowadays. Okay. Before this, there are many indirect taxes are levied in India, like excise duty, custom duty, service tax. Okay. But that is not, or those are vanished now, and only one tax is there, that is a GST, goods and service tax. Right. Now, for we are going to concentrate only on income tax, that is a direct tax, okay, for this course purpose. So when we are talk about the income tax, the PAN number is very important thing that we have to take into consideration. Unless and until we have a PAN number, we have a PAN card in a general language, we can't pay the tax to the income tax, right, department. So here, what is PAN? PAN is a permanent account number, PAN, permanent account number, which is given by the income tax department to each and every citizen of India, though the income is not, though the assessee or sorry, individual, first of all, individual or the citizen of India don't have a taxable income, but still they have to get the PAN number. Okay, this is what we have a practice. And now the PAN is a 10-digit unique number, right? It is allotted by income tax department for the purpose of identifying the individual assessee. Though each and every citizen of India having their PAN number or the PAN card, because it is compulsory in banks also to have a PAN number, PAN card in order to open the bank accounts, right? But though we don't have a taxable income, then also we should have with the PAN number. This is what the practice in India. Yes. And how to apply for this PAN? The PAN number can be PAN number. We have for PAN number we have to apply to the NSDL website. Okay, so first we have to go to the NSDL website for online application, and there we are going to fill up the form number 49A. We can also opt for the offline one, but nowadays the online one is the convenient one because you can directly pay the submit your application and pay the fees online, right? So for this purpose, merely I think 75 to 76 rupees fee is there, but 65 plus 18% GST. This is what the concept there. But it is that much easy as you are going to submit the Google form. So if you don't have the PAN number or PAN card, you can go to the NSDL website and apply there for PAN number. Okay. Then next one, next thing we are going to discuss directly about which is related to the income tax. So Income Tax Act. Whenever we talk about the income tax is governed by the Income Tax Act 1961. Why it is 1961? Because in 1961 we passed the Income Tax Act. Okay, so the Income Tax Act, though the one Income Tax Act is there for 1961, but for the implementation of Income Tax Act we required many more things. like income tax rules, income tax circulars, notifications, legal decisions of the court related to the income tax, and also the Annual Finance Act, which is introduced or which is announced by the finance minister every year. So on 20th February, most of the times the budget is announced, in which the Finance Act is also passed in the parliament. So in order to implement the Income Tax Act, one Income Tax Act, we required the income tax rules, we required the circulars and notifications, we also required the legal decisions of the courts and the Finance Act. So this, after having all these things together, but then only we can implement the Income Tax Act, then only we can properly interpret the Income Tax Act. So let's see how the Income Tax Act or the income tax is implemented. First of all, income tax is a direct tax. It is based on a income of any person, right? Person or an individual. The person under Income Tax Act has a very broad concept, okay, that we will discuss later on. But first of all, you have to understand that persons means there are many more things like individual or AOP, BOI. What is this AOP? Association of Persons. BOI, Body of Individuals. Or HUF, Hindu Undivided Family. Or the partnership firm. Or the LLP, Limited Liability Partnership firm. So there are many more things included in persons which we will discuss later on. But first of all, you have to understand what is income tax. What is the nature of the income tax? So here, the income tax which is based on the income of any individual, okay. Then the who is the payer? Payer is the person who earns the income. And who is the sufferer? Sufferer means who actually bears the tax. It is also the individual, okay. So in this case, the payer and the sufferer, that means who pays the tax and who bears the tax, both are the same person, okay. But in case of a GST, the payer and sufferer are or may be different one, because here the payer may be the person who collect the tax, for example the seller, but the sufferer is who purchase that product or service, ultimately the customer. So customer is the sufferer, is the bearer of the tax in case of GST, but the GST is paid by the seller or the collector of the tax to the tax department, to the GST department. So in case of GST, payer and sufferer are different persons, but in case of income tax, payer and sufferer are both are same persons, okay. And it is a progressive tax. How it is a progressive tax? We can explain you here that when you see how the tax slabs are going on, so you can understand how it is a progressive tax. This is a new tax regime. On the screen you can see here, this is a new tax regime which is introduced in 2021. So these are the slabs. That means for up to 3 lakhs, we had up to 3 lakhs income, we had nil rate of tax. Up to 3 to 7 lakhs, we have 5%. 7 lakhs to 10 lakhs, we have only 10%. And then from 10 lakhs to 12 lakhs, we have only 15%. And 12 to 15 lakhs, we had a 20% tax rate. And about 15 lakhs, we have a 30% tax rate. So this is a new tax regime which does not allow you to take any deductions under Chapter 6A. What is this? We will discuss later on. But there are two tax regimes, two tax slabs available in India, which the individual have to choose which one he will going to apply. Okay, so this is what the new tax regime. At the same time, we have another tax regime, that is the old one. How the old one looks like, or what are the slabs for old one, that also we are going to see here in a short. So if you see here, this is how it looks like, that there are many criteria available here, that individual who has a 60 below 60-year age, or individual who have 60 to 80 years age, and individual who have a above 80 years age. So 60 and above aged persons are known as a senior citizens and super senior citizens. Okay, so here the individuals who have a 60 years, below 60 years of age, they have a tax slab as per this thing, that 1 second, I will clear the whole thing. So here, up to 2,50,000, we have a nil tax. That means we don't have to pay any tax. But from 2,50,000 to 3 lakhs, we have to pay, or 2,50,000 to 5 lakhs, we have to pay 5% tax. Then for this we have to club them. So up to 2,50,000, nil tax is there, no tax is there. From 2,50,000 to 5 lakhs income, we had to pay 5% tax. From 5 lakhs to 10 lakhs income, we have to pay 20% tax. And from 10 lakhs above, we have to pay 30% tax. So this is what the old tax regime. But here, this 2,50,000, whatever the income we have, that is the net total income after deduction. So we can take a deduction like LIC premium paid, or the housing principal installment repayment. So all these things get deducted. Also the tuition fees, or the contribution to provident fund, or contribution to the new NPS, new pension scheme. All these contributions we can deduct, and whatever the income left, that is a taxable income. That is the taxable income, that means on which we are going to pay the tax. So here 2,50,000 means after deduction of all this chapter 6A deduction. Okay, what is chapter 6A deduction? That is also we are going to discuss later on in this course itself. But now you get understand that how the income tax is levied, how the income tax, or how the income slabs are there, and how the income tax is the progressive tax, right? So this is what we have understood now. Now, it is a progressive tax. Now you get it how the progressive tax it is, because whenever we earn some extra income, the tax rate going to be increased, going to be progressed. The rate of tax going to be progressed. That is how it is a progressive tax. Then but in case of GST, once I want to explain this thing, that in case of GST, no progressive taxes there. There are fixed taxes, or the rate of taxes are fixed one for any particular services, like 5%, 12%, 18%. These are the slabs, or these are the rates under which different services and goods are classified. No any progressive taxes there. That means the same product is not get taxed in a progressive manner. That means same product, like for example the cotton is there, it is not get taxed at 5%, 10%, 12%, and 18% at the same time. No, no such things are there. But in case of income tax, the slabs are there. Whenever we earn some extra income, that time we have to pay some extra rate of taxes at a extra rates. Okay, that is how it works. Then the tax is paid on previous year's income in the assessment year. What is this? Assessment year means in which we actually file the returns with the income tax department and get our tax calculated. This is what the assessment year. But in assessment year, the last years, the past years, just past years, income is taxed. Okay, this is what a previous year. So previous year's total income is taxed in current year, that is in assessment year. Okay. So every person who earns taxable income is an assessee. Yes. From income tax department's point of view, the persons who earns the total income above specified limit in as per Finance Act 2024, it is about 2,50,000 or the 3 lakhs or the 5 lakh as per the criteria, as per the type of individual. Like if he is a below 60 years or a senior citizen or a super senior citizen, as per that the assessee, he become the assessee of the income tax department, right? So here assessee means the person or the individual or any company who has a income above a specified limit, that is the assessee for the income tax department. That in other words, the person who get his income assessed with the income tax department for taxation purpose, he is the assessee. Okay. So here the person is required to self-assess his tax and file his IT return with the, IT means income tax return, with the income tax department. Okay. So it is a self-assessment procedure. The person himself decide what is, or himself calculate the total income of previous year, last year, and then he get the tax, then he get the deductions from that income and calculate the net taxable income and pay the tax on it. This is what a self-assessment. So the person himself have to calculate all these things, though we take the help of the CA or the tax professionals, but the person or individual himself can assess the total income, taxable income, and the tax also. So after completing this total course or this income tax certificate course, you will be able to get your total income and the tax also. Okay, you can able to calculate the total income and total tax also, which you are going to pay to the income tax department. Also you are able to submit your returns online to the income tax department. This is how the course is going to be done, or it is designed in such a manner. Okay, so next thing which we are going to discuss is the why the taxes are levied. This is also important thing. Why the taxes are levied in case of a direct or indirect tax. So the basic reason behind this is the government want to earn some revenue through the taxes itself. Okay, there is a tax is one of the source of income to the government. In other ways also can government earn the revenues, like they can open the public limited company and get some profits out of it, but these are different things. But tax is the major source of revenue to the government, and revenue so raised or so collected is used for development of a nation, like it is used on defense or the providing education facilities, healthcare facilities, infrastructure development, like road, dams, bridges. All these things are paid through this collection of, through this revenue, that is the collection of taxes. Okay, that's why the taxes are collected. So taxes are collected mainly in a two ways, directly and indirectly, right? Now let's particular about the Income Tax Act. Okay, so now we are going to discuss only about the Income Tax Act and the direct tax itself, nothing else. Okay, so let's start with the Income Tax Act 1961. First we will see what is the general nature of the Income Tax Act. So Income Tax Act is governed by the Income Tax Act 1961. Yeah, whenever we pay the income tax, it is as per the Income Tax Act 1961 in India, right? This act comes in force from 1st April 1962. It has 298 sections and 14 schedules and 23 chapters. So 298 sections are divided among 23 chapters. Different chapters are there. Okay. So like basic concepts, then the sources of income, then the deductions. All these chapters are there. You will understand whenever we progress in this course. Okay. So these things, whatever the tax have, undergoes continuously changes. Why it is so? Because the whenever income tax departments find any loopholes in the act, they're going to change the act or they're going to modify the sections. Okay, so that's why they brought some amendments to the act, as well as they also introduced the Finance Act every year in the parliament, right? So this is how they modify the or revise the Income Tax Act. Okay, then there are also some rules for the income tax. That rules we are going to discuss. So in the first slide itself, we discussed that in order to proper interpretation of Income Tax Act, we required what? The act itself, Income Tax Act 1961 itself, then the income tax rules, then the circulars and notifications, then the legal decisions of by the court, that is case laws, and last one is the Finance Act. So all these 5 things we are going to discuss one by one in this lecture. So first we will discuss about the Income Tax Rule 1962. Why this is introduced? In order to empower the CBDT. What is CBDT? Central Board of Direct Tax. What is CBDT? Central Board of Direct Tax. So Central Board of Direct Tax is the apex body in Income Tax Department which governs the Income Tax Act in India. Okay, under which there are different officers working for the CBDT itself. Okay, so rules are like directions to the officers or any citizen or assessee of income tax in order to get the Income Tax Act rightly, correctly, properly interpreted. So rules helps the most of the times helps to the assessing officers in order to execute the Income Tax Act. Okay, so proper administration of Income Tax Act is done through the application of income tax rules. Okay, this is how the rules helps in proper implementation of Income Tax Act. Okay, then we will discuss circulars and notifications. What is circulars? Circulars are also issued by the CBDT, Central Board of Direct Tax, from time to time to deal with a certain specific problems and to give some more clarification about the any doubts or any concepts which had a different scope from previous one. Okay, so these things are clarified through circulations. Okay, and this is again the guidance to the officers and assessors. Okay, and what about the notifications? Notifications are the same thing. Whenever they, for example, whenever the Income Tax Department want to extend the date of filing of income tax return, so this is communicated through notifications. Like in our college, we had a notice for any things which the principal want to communicate with the students. So that issued through notice itself. So in the Income Tax Department also, if any communications the CBDT, Central Board of Direct Tax, want to issue to the assessing officers or to the assessee or to the citizens of India, so that time they issue the notifications. Okay. Then the case laws. Yes. Case laws are a study of, case laws are a cases which have a have some definite orders from the court. Okay, most of the time the high court have a verdict about the income tax, or how to implement that or how to interpret that. So that time that become a case laws. So these case laws are also binding on the income tax department, and these also have to take into consideration when we interpret the income tax laws. Okay, so this is how the Supreme Court or the High Court have some specific decisions about some specific type of cases related to the income tax. So that time these cases are considered as a case laws, and that also we have to take into consideration when we are, or when the assessing officers assessing the following the assessment procedures. So this case laws are also helps in interpretation of Income Tax Act. Then the final one is Annual Finance Act. Annual Finance Act, mostly we know about the rate of taxes. Yes, whenever there is a budget on 20th February, so on every TV channels, we had this discussion is going on that what are the rates they have increased, how they have increased, what are the major policy changes they are going to make in the coming years. So all these things are there in a Finance Act. The Finance Act is the activity of every year introduced by the Finance Minister of the Government of India, and he presents the budget to the Parliament. So the part A contains his Finance Minister's speech about the fiscal policies. Then the part B contains the detailed tax proposals. So this tax proposals includes the rate of taxes and the TDS to be deducted. So these rates are discussed there. In order to implement the above proposal, finance bill is introduced in the Parliament, and that is being approved in the Parliament and get agreed with the President. Okay, then only it becomes the Finance Act. So how the Finance Act is passed, you understand that in a Parliament itself, the Finance Minister introduced the finance bill, and some discussions are had on that, and then it is get approved by the member of parliaments, right, with the permission of President, right? So here now we will find exact what is connection between the Income Tax Act and the Finance Act. So the Act provides the method of computation of income. What will be the income which will be included in a taxable income? So there are 5 sources of income. We are also going to discuss in a detail in coming lectures. But the 5 sources of income that I'm going to be named here are, first one is the salary. Second source of income is the income from house property. Third one is profits and gains from business and profession. Fourth one is capital gains. And fifth one is the income from other sources. So these 5 sources of income which are going to make your total income of a previous year. Okay, so previous year's total income is calculated after adding these 5 sources of income, and then the tax is calculated. So this is how the Income Tax Act provides the method of calculation of income, but it does not provide the rate of taxes. The rate of taxability or the rate of taxes are provided by the Finance Act. So the first schedule of part 1 of the first schedule tell you about the rate of taxes, and part 2 of the first schedule tell you about the rate of TDS to be deducted on a certain cases. So there are many more TDS rates are there, which are there in part 2 of schedule first. So these are implemented in a coming year. So whenever there is a budget that is for a coming year, the whatever the tax rates are there, TDS rates are there, those are applicable to the coming financial year. That's why it is introduced on 20th February each year, and that is applicable from 1st April itself. So this is how the Finance Act is implemented. So first it is get sanctioned in a parliament, then it is implemented from 1st April, right? Then if you want to see how the Income Tax Act was look like, so there are 23 chapters. This is what the link we have, and also Finance Act link we had. But if you want to see just now, I can show you how exactly the act was there on your income tax websites. Just a minute. Let me show you how it is looks like. So one sec. It is looks like. I think it is. Yeah, this is how. No, it is a Finance Act. This is how the act looks like. This is how. Every time you have to select the section. So this is the one section. Then it get open chapter 1 preliminary, and you can go through of it. If you want the particular section, so also you can add some. I think I left off it. Okay, no problem. We will see the Finance Act. You can also see the Finance Act on Income Tax Department's website. There are many more things you can find out here. You can get the public campaign, e-tax services, tax information services, tax laws and rules. Here you can find the Income Tax Act. Section wise also you can find it. Also you can find the income tax rules. Also you can have some circulars, notifications which are important from, and the budget, that is a Finance Act. So here you can find the Finance Act itself. So Finance Acts you can see as per the sections. If you see the section second, so income tax, this is what about the income tax. Section 2 is there. There are many more sections. It is related to TDS, GST, all those things are there. But in case of income tax, you require this second section. It is a more descriptive one. But as we seen earlier that there are income tax slabs are there. So you can search on Google and you can get the tax rates and the TDS rates also. Okay, so this is the better way to search, because it most of the times by reading this thing, section 2, we can't get anything in a nutshell. Otherwise, we have to go through all these things and then we will understand what is exactly they have to tell us. So the better way, you can Google it, what are the income tax slab rates for a assessment year or financial year. Particular, you have to type there, because every year the rates changes. So if you type that tax rate, income tax slabs for financial year 23-24, just I had typed here and click any one of that, you get this website and you will find the rates also. So these are the rates as per new tax regimes, right? And also as per the old tax regimes. So you will get here. Okay, let's go to our PPT presentations. So now you understand how the Income Tax Act and Finance Acts are related one, and which is the link it is going, which is the link it has particularly, that is a section 4. Section 4 is the link which connects the Income Tax Act with the Finance Act. So Income Tax Act, section 4 of Income Tax Act is a charging section which empowers the finance minister to make decisions about the tax rates, tax slabs. Okay, this is what a charging section, section 4. Now we will discuss about the previous year and assessment year, how the previous year and assessment year is considered. So previous year means the last year, which is just we completed. It is a finance year. In India, 1st April to 31st March is the finance year. And सगळे गेले. माझा पण वेळ झाला काय? मी लवकर आली. ठीक आहे, एक 10 मिनिटं जरा असं लेक्चर चालू. 10 मिनिटात मी so previous year, section 2 subsection 9 defines the assessment year, and section 2 subsection 34 read with section 3 defines the financial year. The financial year is the immediately preceding the assessment year. Financial year is the immediately preceding assessment year, that is the previous year. So suppose you are currently in a financial year 24-25. So for us, financial year 24-25 is the assessment year, and the financial year 23-24 is previous. So the previous year, financial year 23-24 is a previous year, sorry. So the financial year 23-24's total income is chargeable, is assessable in the current financial year, that is financial year 24-25. That's why it is the assessment year. So the income tax actually calculated, and the assessee individual actually get assessed, complete the assessment procedure in current financial year, that is 24-25. That's why it is called as a assessment year. And the last financial year, that is 23-24, is your previous year, of which the total income you are going to be assessed in current financial year. So this is how the Income Tax Act is applied, through previous year and assessment year. So now you get the total concept of how the Income Tax Act is implemented, interpreted, and what is exactly the tax rates of income tax for current assessment year. So in the next lecture, we will understand the Income Tax Act more detail, but for this lecture, we will finish here. And so take care, bye, and listen my lectures. If you don't understand, you can pause, you can slower the speed, or if you want, you can increase the speed of this video also. But complete the assessment after this lectures, after listening this lecture. So thank you all. Thank you for listening. Bye. And see you in the next lecture. Thank you so much.